Hi everyone, welcome back to the Fowle Consulting cryptocurrency trading course. This lesson will focus on financial metrics. So here's an overview of what this lesson will be about. We'll first start off with an introduction to financial metrics, what they are. We'll go over how to use financial metrics to analyze a cryptocurrency. We'll talk about combining different financial metrics in order to best compare and contrast different projects. And we'll also go over the stock to flow model in regards to Bitcoin and gold. So financial metrics are one of the most commonly used metrics to analyze cryptocurrencies. This can include price history, the liquidity of the asset, volume metrics, market capitalization, and supply. Let's dive into supply mechanisms. So understanding how the supply of a coin can affect market prices is key. Supply metrics to follow include the maximum supply. This is the maximum supply of a coin to ever be created. Projects launching with trillions of coins created may draw red flags, so that is not a common thing to see. And if you think about it, if there are more and more coins, trillions of coins, quadrillions of coins within a certain project, it would be hard for that project to gain in value in respect for the greater amounts of supply. The demand has to reach for the value of those coins to go up. Another metric to look at is the circulating supply. This is the amount of coins available. Also, the rate of inflation. So this is the rate that new coins can be created and added to circulation. If the project has too high of a rate of inflation, coin supply can become oversaturated and fall in price. And then there's any deflationary protocols or the burn rate of a project. This is the rate that coins are burned or destroyed and or taken out of circulation. So if the project has a deflationary protocol, such as Ethereum, the remaining supply that is not destroyed may increase in value if demand stays the same. So here's an example of some various metrics. These are metrics supplied by CoinMarketCap. So you can go to CoinMarketCap and you'll be able to analyze and specifically look at different financial metrics for a variety of cryptocurrencies. Right now we're looking at Bitcoin. We see its market cap, its fully diluted market cap, its circulating supply, and its volume. Right here, the circulating supply shows that there is about 18,900,000 Bitcoin of the it is in total in the circulating supply. This is about 90% of the max supply, which is 21 million Bitcoin. Taking a look at other metrics. So this is Bitcoin supply schedule. This is the schedule for the amount of Bitcoin that will be produced or be created over time. Since its creation in 2009, we see the amount of Bitcoin being created, the rate of its creation slowing down. After every certain amount of blocks, 210,000 blocks, the halving protocol occurs, which is essentially is encoded into the blockchain, the Bitcoin blockchain's programming, where the issuance rate, the Bitcoin created per block and rewarded to miners who are processing the transaction, goes down in half. So from 2009 to about 2012, they were receiving about 50 Bitcoin per successfully completed transaction, successfully mined block. And that was reduced to 25, and this took about 1,423 days. Now, while this number, the number of days in between these different halving cycles, may differ, the main thing to look at is that after every 210,000 blocks added to the blockchain, and a halving event will occur. And using that metric, we can start to look at the amount of blocks added, the amount of transactions happening on the Bitcoin blockchain, and we can start to measure out when the next halving protocol will occur. The most recent one was in May 12th, 2020. The next one is about May 9th, give or take, 2024. As of right now in 2022, the current amount of Bitcoin created per block and added to the circulating supply is 6.25 Bitcoin. Here's Ethereum. Here we see a variety of metrics for Ethereum. Particularly, we're going to look at Ethereum's circulating supply. It's about 119 million ETH, and it's also equivalent to its total supply. As you can see here, there is no max supply. There is no max supply indicated or programmed by the Ethereum Foundation, the Ethereum developers, which is different from what we see in Bitcoin. Bitcoin has that 21 million maximum supply. Now, looking at other metrics in regards to Ethereum, we can see Ethereum's issuance rate and also its deflationary rate, how much Ethereum is destroyed with every transaction. These are metrics from watchtheburn.com. This is a website that tracks Ethereum's fee structure and transactions and deflationary rate over time. So here we see the base fee per day. This is the minimum transaction fee, or the transaction cost per Ethereum transaction. Taking a look here, the darker orange at the bottom, this is the minimum gas fee, or the minimum price per transaction. The yellow is the median, or the average, and then finally the red is showing the highest, the more extreme gas prices. And we've seen over time this has continued to increase throughout Q3 and Q4 2021 into 2022. Here are some additional figures from watchtheburn.com. Here is the amount burned per day. Here is the amount of Ethereum destroyed with every transaction. This is Ethereum that would be afforded and allocated to the miners operating on Ethereum. Since August 2021, there was a protocol upgrade called the EIP 1559, and due to that, there was a change in the coding where instead of additionally adding more Ethereum to the circulating supply, additionally adding more Ethereum rewarded to the miners, that Ethereum is now going to start being burned, which would then in turn start to reduce the amount of ETH in circulation. And we're starting to see this number continually to increase. We see particularly a particular day in early January 2022 really has overshadowed the rest and has shown a significant amount of Ethereum burned. Below this figure, we see the net issuance rate per day, where we see metrics regarding the amount, the net issuance from Ethereum per day, where for the majority we see there is a positive net issuance, meaning that more Ethereum was actually added. But since August 2021, with this new deflationary protocol, we're starting to see days where there is a negative net issuance day, which means that there is more Ethereum burned per day than there was actually added and created to the circulating supply. Particularly, we saw in September, October, there were days where we saw a negative issuance rate, and also in early January 2022, there were several days where there was a negative net issuance per day.